All right, welcome. Today we're going to decode a really intense pre-market brief from the near future, March 24, 2026. And this is all about what traders call the war tape, a situation where geopolitical headlines are literally driving every single move in the market. So let's jump right in.
So, imagine waking up to this headline. This is what completely flipped the script. Just the day before, you had a market rallying on the hope of a ceasefire. By Tuesday morning, poof, that hope was gone, replaced by the cold, hard reality of an expanding war.
So how on earth did the market get such a dramatic case of whiplash? Let's unpack how we went from a fragile peace to the brink of a much bigger war, all in the span of just 24 hours.
And this slide just lays it out perfectly, doesn't it? On Monday, you've got a ceasefire rally with the S&P 500 up over 1%. Hope was in the air. By Tuesday morning, that's all gone, replaced by fears of stagflation, that toxic mix of a slowing economy and rising prices. Futures were already down 0.5% because the news got ugly overnight, a total head fake.
So what happened? Well, two huge things dropped overnight. First, a Wall Street Journal report, a credible one, suggested that major Gulf allies, the UAE and Saudi Arabia, were getting ready to jump into the fight. And then, to make matters worse, Iran's deputy speaker went public and just shut the door on any possibility of talks. Suddenly, the market had to reprice a whole new level of risk, and it had to do it fast.
All right, so when you hear conflict and Middle East in the same sentence, what's the first thing you think of? Oil, right? Let's trace that immediate domino effect across the market because it all starts with the price of crude.
And yeah, no surprise here, oil prices just shot up. The brief shows the new target range spiking right back towards that super important psychological level of $100 a barrel. This one move changes the entire inflation picture. And just like that, with oil on the move, the market dusts off an old playbook. The strategy becomes dead simple and super defensive. You want to own the energy companies that make more money with higher prices, and you want to bet against the broader market, which gets squeezed by that same inflation. And this right here, this is the perfect recipe for stagflationary pressure on the S&P 500. You've got war creating uncertainty, spiking oil fueling inflation, and that traps the Federal Reserve, which means any hope of rate cuts gets pushed way out. That rally from yesterday, it's now officially a head fake, and the trade is to flip immediately from bullish calls to bearish puts.
Okay, but while the rest of the market is running around with its hair on fire, one company gets some news, some huge news, that is so fundamentally good it just cuts right through all the noise. This is a story about becoming absolutely mission-critical.
Palantir's Maven AI just got designated a program of record. Now, this is not just another government contract. It is, as the slide says, the government AI equivalent of becoming the operating system. Think about it like becoming the Windows or the iOS for the Pentagon's AI. You are the platform. This locks in revenue for years and years to come.
And the timing here, you really can't make this up. Palantir gets this incredible, long-term, fundamental win on the exact same day that the geopolitical situation creates an immediate, massive demand for its product. It's just a powerful one-two punch.
And listen, this wasn't some struggling company getting a lifeline. This news landed on a stock that was already on an absolute tear, up over 87% in the past year. This is like pouring gasoline on an already raging fire.
Okay, let's zoom out a bit. What this kind of environment does is create a really sharp divide in the market. You get your clear winners and you get your clear losers. There's not a lot of middle ground. And this watch list from the brief really tells the entire story. Look at it. You have maximum conviction bullish bets on defense with Palantir and energy with Exxon. You have a maximum conviction bearish bet against the whole market with SPY, and then another energy play with Occidental. It's a pure risk-off defensive setup.
So let's talk about that energy bet for a second. You've got two names here, ExxonMobil and Occidental Petroleum. Think of them as two different flavors of the same trade. Exxon is the big, safer, large-cap way to play it. Occidental, on the other hand, is the high beta choice. It's a stock that tends to make bigger percentage moves when oil spikes. Both are bullish, they just offer different risk profiles.
But what happens when you have a company with an absolutely incredible story that gets stuck in a terrible macro environment? Well, that brings us to the most challenging name on this list, Micron Technology.
And wow, this chart just says it all, doesn't it? Micron had just delivered what the brief called the most bullish semiconductor guide in history. Amazing news, but it was down over 4%, while its peer NVIDIA was actually up. It's just a brutal reminder that sometimes the macro tsunami can wash away even the best company-specific news.
So what do? The market's a mess. You've got good news here, bad news there. How do you actually put a trade on?
Well, it all comes down to having a disciplined plan for the opening bell, for those first few critical minutes.
And the execution plan is super specific. Step 1, and this is absolutely critical, close yesterday's trades. Get the bad positions off the table before you do anything else. Only then do you start putting on the new trades that fit today's reality. And for that tricky name, Micron, it all comes down to one key price level, $400. If it breaks, you're out. No questions asked.
I want you to really let this sink in. This quote from the brief is a masterclass in trading. You can be 100% right about a company's future, but if your timing is wrong and your entry price is wrong, especially in a market this volatile, you're still going to lose money. A correct thesis can absolutely turn into a loss.
And that really leaves us with this final big question. In an environment that's just getting yanked around by unpredictable headlines, is it more important to have the right prediction, or is it more important to have the right playbook, a clear, disciplined plan to react when your prediction, inevitably, is wrong?